Thank you. Dr. Murphy.
I'd like to thank Chairman Upton, Congressman McNerney, and the other members of the subcommittee for the opportunity to speak on this important topic concerning federal tax policy and its effects on energy markets and consumers. When it comes to assessing tax policy, economists generally focus on the ways the tax code distorts behavior. There's a general presumption in favor of letting market prices guide the decisions of producers and consumers so that resources are allocated according to the underlying economic realities. When the tax code artificially steers behavior away from the market outcome, this makes society poorer. A textbook example of such harm is the distortions caused by an income tax. By artificially reducing the reward to earning wages, the income tax discourages work effort. On top of that, an income tax also leads individuals to save less because the income earned from saving is itself taxed. The income tax thus makes society poorer by both reducing work and reducing investment. Now, although economists disagree about the proper size of government, there's a general consensus that if the government is going to raise a target amount of revenue through a percentage tax, then the way to minimize the economic fallout is applying that tax on as wide a base as possible in order to keep the rate of the tax as low as possible. Now, to be sure, there's other goals of tax policy besides economic efficiency, but in terms of minimizing the distortion of behavior, the tax code would apply the same tax rate to all sectors of the economy and would contain no arbitrary deductions or credits that favor one group over another. Now, I should clarify that the principle here is no arbitrary deductions. I bring this up because some proposals for tax reform want to take away the deductibility of interest expenses, an option that currently gives companies an incentive to engage in debt finance relative to equity finance. But to me, it seems this has things backwards. After all, a company's interest payments really are expenses to the company. The real source of the distortion is the currently high corporate income tax rate of 35%. Lowering that rate would alleviate this particular distortion. Now, when it comes to energy markets, there are many provisions of the tax code that violate these general principles I've discussed. That is to say, the tax code currently has many provisions that are specifically designed to favor certain sectors of the energy market. Society ends up producing energy using more resources than it needs to because the tax code artificially hides the true cost of less efficient energy sources. The best example of such a distortion occurs in the electricity market, where there can be long stretches of negative wholesale prices. Wind operators will pay the grid to buy electricity from them, with the price sometimes falling below minus 20 degrees per megawatt, $20 per megawatt hour. The reason for this strange occurrence is the generous production tax credit, which currently gives the owners of wind facilities a tax credit of $23 for every megawatt hour they produce. This can make it profitable at the individual level to sell wind power even at negative prices, but of course from the perspective of society as a whole, this is clearly a perverse outcome that would not occur on a normal market. The Congressional Research Service recently estimated the implicit expenditures in the tax code for energy-specific provisions. It found that the production tax credit was the most expensive at a projected cost of $25.7 billion from 2016 through 2020. The second most expensive provision was the related investment tax credit, also designed for renewable energy sources, at a cost of $13.6 billion. These two provisions alone accounted for almost 48% of the total energy tax advantages analyzed in this particular report. By artificially encouraging the expansion of wind and solar capacity, current tax policy makes energy production less efficient. Now, some have argued that wind and solar are infant industries that need support from the tax code. But these arguments have been around for decades. At this point, wind and solar are not infants, they're grown adults. If they can currently only serve niche markets, that's the economic reality. It's also worth addressing the distributional consequences of some of these particular tax measures. So, for example, a 2015 study by UC Berkeley found that for the particular measures trying to reward consumers for buying electric vehicles, 90% of the credits went to filers earning above $75,000 per year, and 35% of this particular tax credit was claimed by people earning above $200,000 per year. A more consistent, neutral tax code would let producers and consumers choose the mix of energy sources that made the most economic sense. Energy would be produced at the lowest cost, freeing up resources to increase output in other areas of the economy, giving Americans more reliable energy and a higher standard of living. Thank you, and I look forward to answering your questions.
Thank you.